So let's start off with something that I know that you have thoughts on, which is the role that technology plays with gold.
Yeah, it's one thing that I think we'll have to think about. In addition to the classic investments for gold, which we know is in jewelry and certainly as investment, gold is a critical metal in the fact that it's used in our everyday lives. It's used in cell phones because gold being inert, you can apply a current to it and therefore it doesn't spark. So when you consider there's upwards of 20, on average about 20 milligrams of gold in a cell phone. And when you multiply that by the 7 billion cell phones in the world, there's a lot of gold within it. But key to it is we talk about AI, servers themselves have a lot of gold in it. So when you look at acres of data centers, you can have many kilos of gold. So as we go forward, as well as the conventional uses, we have these new uses that we use in our everyday lives, which kind of brought me out of retirement to focus on what we're doing in South Dakota because of the fact it's in the States and it's an area where we use a lot of gold here in North America. So the key project that I'm currently working on is Dakota Gold Mines. We're at booth 823. Key prices, we have 48,000 acres in the Homestake District, which you can see here. It's the area of the old Homestake mine. Over 40 million ounces was mined here from 1878 up till it shut down in 2000. So we've come back. There's been no exploration done here since 1996. We found a very high-grade gold mineralization, which you can see in the red in the Maitland area, which we've previously drilled, and we'll be going back to drill our Maitland area this year. But importantly, under option, we have the green area that you see, which is our Richmond Hill project. And we have a large resource there. We completed our IA with cash flow, showing a very robust project. It's got a 1,050 ASCII cost, and we're looking at producing about 150,000 ounces a year. And we have a pipeline and pathway to get that in production by 2029. So very excited about that project. And then with the Hemlo project, which is in Ontario, what's interesting here is I actually started my career here back in 1982. I was a mine geologist working at this mine, helped drill it off, and I'm very pleased to be back involved with Hemlo in that regard, and the team that John Ott and Jason have put together. It's been operating for over 40 years. It's produced over 20 million ounces of gold, but with this gold price going up, as you can see in this slide with all of the red areas, you can see these areas where there's potential. You can see mineralization intersections of 3 grams over 6 meters or 4 meters of 6 grams. So lots of exploration opportunity here, and I'm just very pleased to be back here working with here as lead director, with my main focus, of course, being at Dakota.
Okay, so Robert, one of the things that I think is incredibly valuable for everybody here is that we're now starting to see retail investors show up at these events. So that's the people who just have regular discount brokerage accounts and invest in stocks. And there's obviously hundreds of opportunities for them when they walk around at an event like this, and there's things that they should probably be thinking about in terms of how to find those outsized returns that you have provided with some of your past companies. So what are those things that you think they should think about?
Right, so we put it out here in this slide. First of all, it's people. I've had a great track record of investing in other entrepreneurs here in Vancouver since I first came here in 1985. You know, individuals like Ross Beatty, who I shared the stage with this morning, the Lundin family. You know, there's just many groups that have the technical abilities that always seem to be able to go out and find mines. So often the first thing I look at is, all right, who is the individual, what's their track record, and what they've been able to do. So focus on the people. The other then is jurisdiction. As I pointed out with Dakota, we're currently working on private land in the United States. That allows us to have a cadence to be able to advance our project forward. When I first started working at Hemlo in 1982, from discovery to putting it in production was 3 years. And that's the fact that jurisdictions have changed now. The permitting processes take longer. So you want to make sure that wherever you tend to be investing is that they're favorable for mining, and there's actually a pipeline to be able to take that exploration project that you have and advance it forward and be able to get into mining. The other thing, of course, that you want to look at are the First Nations engagement, or with Native Americans in our case, to ensure that all stakeholders are involved within the process and ensure that they're able to benefit from from it. And of course, then key, being a geologist myself, is what's the underlying geology look like? You've got to make sure that you have good geology. I was fortunate in my career when I started in the 80s that I actually worked with mine companies, with Teck. I worked underground at Lamaque. I worked underground at David Bell. So many of the projects that I've been able to discover, I know what a mine looks like. So it's important, look at the people to ensure they have the talent, make sure the geology is there, and then capital discipline. You want to make sure if people are out raising money that they're very cautious about how they deploy it. At Dakota Gold, we make sure that we invest our money in the ground. For the first 5 years involved with the company, I didn't draw a salary because I have a great share position. I'm going to be able to appreciate my stock that way. Frequently, I go to investor conferences like this. I may be able to take our booze along. So what you want to look at is how much G&A is being spent versus what goes in the ground. So those get kind of the summary, which are who are the people, you know, what jurisdiction you're operating in, how favorable is the geology for other mines in the area, and then the capital distribution, a discipline to be able to raise capital, ensure that you get it deployed into the ground the right way.
Okay, one of the big themes here that I think investors are looking at right now, or they're almost always looking at, is the idea of the Lassonde curve, which is that sort of sweet spot between feasibility and construction, where we've seen outsized returns for those investors who are willing to be patient when others are bored. From your view, if investors are sort of looking at it from this lens, what are the things that they should be thinking about?
Right. So right now we have a bull market in gold. So all of the companies which are presenting here are benefiting from that. Many are brand new discoveries, and it's during that time of discovery when people are putting out drill results that you get a lot of competition for the shares, because often when a company's starting out, it may not have much equity out, and that of course helps drive the share price up. So during the discovery phase, which you see here on the screen when you look at the slide which is on your left side, and that first rise up, that's the exploration phase when you're able to see what a lot of excitement is actually created. In the case of Dakota, we came out and started doing drilling, got good results. Our share price was up in the $5 range. And then, of course, once we've drilled it off, particularly in our Richmond Hill area, we're now doing the pre-feasibility work on it. And then you go down into that kind of trough area. And so depending on where you are, that's often a good way to be able to buy and purchase stock, because we're in that trough area doing the exploration work that you're talking about, or the engineering work. It sets you up for that next part of the curve. And it's that next part when you actually go up in production and are able to start generating cash flow that you're able to attract a different kind of shareholder. Often in the early stages, you have investors like ourselves here. I continue myself to invest in the space, but those institutional investors, which buy the large mining companies, often will come in the phase that you see here in that kind of second area where you actually move up. So depending on where you want to invest, just see what the company's doing by reading its reports online. Is it doing drilling? Is it at the early stage? Or are they doing some of the engineering work, which means that they may not have the same appreciation as you would, but over time, when you look at companies like a Skeena, or if you look at an Equinox or a Torex, those companies a decade ago were trading at dollars, and now they're trading at many tens of dollars. And so finding where you come along that curve is important for investors, particularly here at a conference here, when you have so many opportunities to invest in.
Now, one of the stories that I'd like to ask you about is your days at Pretium.
Right.
There obviously were some more dark times where class action lawsuits, shareholder skepticism. I'm curious here, how is it that you maintained the conviction to stick with it through those periods, and what are the things that retail investors could learn from hearing about that story?
Right. We had two consultants on the property. One was an engineering group and another was a resource estimator. And they had a disagreement with respect to our resource. Now, because I had worked at the Hemlo mine and worked at the Lamaque mine, I knew what a mine looked like. And so when we did our bulk sample, we were very convinced that, yes, there was a mine there during that period. But because it created a little uncertainty between your consultants, so it's often something, again, to watch for. It's about looking for the geology geology, because as you see here, as we went through that trough period, we built the mine, we put it into production, and then you can see we come out of the other side of the Lassonde curve when the stock went from $4 and $5 all the way up to 19, because we knew the geology ourselves. And so often you want to make sure if there are consultants or individuals who are involved in the project that they have the competencies which are important to basically opine on what they're talking about. So I've been involved in now with what we're doing at Dakota. It'll be my 7th discovery to production, so you learn along the way. But again, it's key to have good quality individuals working for you and make sure you have the right consultants who have the competencies, in this case, to evaluate a high-grade underground mine. And as you say, because of the fact that I had the experience in the team that I worked with, we knew we had a mine, and it was just about being capitalized, going through that time period, and then you can see the rapid velocity that the share price took once we get up in production and started making gold. And to date, as you say, we gave 6-time returns to shareholders, and the mine's produced over a couple million ounces. So it was a really good success. It's just along that exploration timeline that there were certainly individuals who had differences of opinion, but one ultimately showed to be right.
Okay, I'm going to wrap it up with one question that I have for you that I think is of value to the people sitting here today that are looking at investing in mining, which is this. Where do you see the sweet spot in terms of the discovery cycle or the development cycle for mining stocks for any investor who's sitting here trying to figure out, okay, where am I going to be able to find my alpha in this market? Is there a particular area, geologically speaking, where you think that there is a level of data that has come in and upside that still has yet to come where you would get most excited?
I mean, and so I'll say this from a personal perspective, being an exploration geologist, first you want to look at where you are on that Lassonde curve. And I try and be in 2 positions, which is one, if you know individuals who are out exploring the project, and there's many here when you walk around who have a resource and they're looking to expand it or drill it, and they're still in that exploration phase where you can see substantial increase in share price. And kind of once people have achieved that, then it's a matter of whether you have the patience to be able to then go through that other segment of it. But there are many companies here, such as ourselves in Dakota, where we're doing that pre-feasibility work that'll lead into feasibility and then on to production. Because I know from my experience with Pretium and many other companies, once you achieve cash flow, I say, that's when you really can see the share price accelerate. So as you're going around, I mean, Rick Rule gives a great boot camp about where do you want to buy in this cycle, what's the level of the company and able to position yourself, and then look where you are jurisdictionally. We talked a little earlier about the practical application of gold in AI technology. What's really going to drive it going forward is copper. Copper has probably one of the most criticality aspects of it due to the fact that it's used in server farms and used a lot within AI technologies. So we're going to use millions of tons of copper going forward, and of course, where's much of the copper come from? Some comes from Africa. Most of it comes from South America. Almost 40% of the world's copper comes from Chile, from Argentina, from Peru, and Ecuador. So as you're looking for exploration companies who have the opportunity to find large mines, as you would, then certainly, Latin America and South America with large gold, copper porphyries, you get the benefit both of the precious metal of copper and silver frequently, and then that large copper exposure, which we're just going to continue to use more copper as we go forward in society. So that's kind of where I look, in addition to what I do with Dakota, and certainly with Hemlo, is, where's good exploration? And for me, that's certainly an area that's attractive at this point in time.
All right, well, Robert, we'll wrap it up from there. Thanks for taking the time to do this, and I appreciate everybody who took the time to listen.
Yeah, thanks all. We're at Dakota, booth 823. Thank you.